So the Japan, the carry trade stuff, right? People keep asking me about. Their rates is basically sitting at 1%. So they're saying if it goes to 1.25% and becomes too expensive, that's basically going to be like the catalyst for the yen becoming too expensive, and then the reverse carry trade stuff happens, that catalyst, right? That's one example. Another example is if the central banks aggressively cut their rates, right? Or if there's some sort of global, catastrophe that goes on, global economic catastrophe that goes on, right? Those are a couple reasons, right? And this is what basically all of the economists are saying, right, about this carry trade stuff. I'm going to read it to you, share it with you right now, because people are asking me what do I think about it, because some guy brought it up that was lying about the XRP price going to $700 last year, then lied again about the XRP price going to $2,000 this year because he's trying to get clients. So I'm going to share with you what everybody's saying, because this is nothing new, like that other guy tries to paint it as, like if he's the only one who knows. It's nothing new. So I'm going to share with you what's going on with it, about what everybody's saying about it, all the top people are saying about it in 2026. Okay, so here we go. So half of surveyed economists still expect the Bank of Japan to wait until December to bump its benchmark interest rate higher. Stay with me all the way to the end of this video and share the video and like it and comment. So let's get right into it. And subscribe. And become a Patreon, link in the description. So half of surveyed economists still expect the Bank of Japan to wait until December to bump its benchmark interest rate higher, with Prime Minister Sanae Takachi's government seen as a key obstacle to further action, right? So some 50% of 52 economists selected December as the most likely timing for the next move, right, after the BOJ raised the rate last month. According to the poll, another 40% said it would come in October. Takachi is known for support monetary easing, and her government's influence will be a deterrence for the board to proceed along the path toward policy normalization, right? According to 59% of the respondents, an overwhelming majority, 82%, forecast the pace of the rate hikes to be roughly once every 6 months, an increase from 71% in a June survey. The survey shows economists remain less confident about the BOJ's ability to hike than market participants, who were pricing in an 83% probability of a move by October as of Thursday morning. According to people familiar in a report published after the survey closed, the board is open to raising interest rates at a faster pace than the consensus among the economists, as the weak yen adds to upside inflation risk. Okay, but like I said before, the hyperinflation is going to continue, which is going to create global problems. Before that guy who lied about XRP going to $700 when he just came out in 2021, and I was here since 2016, and this is my third page. The government has tried to play down perceptions. It is seeking to influence the central bank in an annual economic policy guideline earlier this week. The government referred to its commitment to respecting the BOJ's autonomy. That added reference came after an earlier draft helped send yields on a benchmark 10-year government bonds to the highest in 3 decades by fueling concerns over a delay in normalization. Subscribe. Don't just watch, and give it a like. We're going to take this channel to 500,000 subscribers. The real truth, not clickbait lying garbage. Even so, many economists remain unconvinced. About 2/3 of respondents said they didn't believe that the changes to the guideline mean that the government will refrain from attempting to influence the central bank's independence. The bar is high for an early additional rate hike because of the gap between the BOJ and the government over the pace of interest rate increases, said Tushui Uno, the chief economist at NLI Research Institute. The BOJ raised borrowing costs to 1% on June 16th without any clear signal from the government opposing the action. Some 65% of the BOJ watchers said that the weakening of the yen compelled Takachi to accept the hike. Okay, so all this hyperinflation is what's weakening the yen, especially with the dollar, and it's going to increase because of the war. So the yen slid past yen 163 per dollar earlier this week for the first time since 1986, after flaring tensions in the U.S.-Iran conflict spurred oil prices higher. A weak yen adds to inflationary pressures as Japan imports virtually all of its energy and well over half of its food. Like I said 7 years ago, we're going to get in a new hyperinflation world, which was said by the Bank of International Settlements. We're entering a new era of hyperinflation, and now look what's happening. Before all these wannabes came out after me, with the currency continuing to slump amid persistent uncertainty over the direction of oil prices, many economists aren't ruling out an early rate hike. When asked about the earliest possible timing for a policy shift, some 37% chose September, up from 23% in a survey following the June meeting. So this is what all the global economists in the world are saying. Upside risks to inflation remain elevated, with the yen's depreciation adding to price pressures. Oh my goodness, said Kinto Minami, an economist at Dawa Securities. The BOJ is shifting the focus of its rate decisions towards managing upside inflation risk, making an additional hike increasingly likely to come sooner than previously expected. A key focus of the meeting will be updated quarterly economic projections. The median economist prediction suggests a slight downgrade of inflation forecast for this year to 2.6% from 2.8%, while economic growth projection will be upgraded to 0.7%. So this is exactly what's happening with all this trade stuff. Yes, sir.